Index funds are one of the best investment options for those looking to grow wealth with minimal effort. Unlike actively managed funds, index funds track a specific market index, such as the S&P 500, and provide diversification, low fees, and solid long-term returns. While most index funds aim to match market performance, some have consistently outperformed due to strategic fund composition and lower expense ratios. If you're looking for strong long-term investments, here are 10 index funds that have consistently beaten the market. 1. Vanguard S&P 500 ETF, VU. The Vanguard S&P 500 ETF, VU, is one of the most popular index funds, offering exposure to the 500 largest U.S. companies. Over the past decade, VU has delivered impressive returns, averaging around 10% annually. With a rock-bottom expense ratio of 0.03%, this fund is an excellent option for investors looking for low-cost exposure to the stock market. 2. Fidelity Zero Large Cap Index Fund, FNILX. Fidelity's Zero Large Cap Index Fund is unique because it has zero expense ratio fees. It closely mirrors the performance of the S&P 500 but without management costs eating into your returns. Over time, these savings can make a significant difference in an investor's overall gains. FNILX is an attractive option for those seeking long-term growth without high fees. 3. Schwab U.S. Broad Market ETF, SCHB. Schwab's U.S. Broad Market ETF, SCHB, provides exposure to over 2,500 stocks across the U.S. market, making it a highly diversified choice. This fund has an expense ratio of just 0.03% and has consistently delivered competitive returns, often outperforming actively managed funds. For investors seeking market-wide exposure, SCHB is a strong pick. 4. iShares Core S&P 500 ETF, IVV. The iShares Core S&P 500 ETF, IVV, is another low-cost S&P 500 tracker with an expense ratio of 0.03%. It has historically provided strong long-term performance, closely mirroring the index while keeping costs low. Many long-term investors prefer IVV because of its liquidity, tax efficiency, and consistent market-beating returns. 5. Vanguard Total Stock Market Index Fund, VTSAX. Vanguard's Total Stock Market Index Fund, VTSAX, provides exposure to the entire U.S. stock market, including small, mid, and large cap stocks. With an expense ratio of 0.04%, it offers broad diversification and has delivered long-term returns that frequently outperform individual stock-picking strategies. Investors seeking complete U.S. market exposure often turn to VTSAX for its stability and growth potential. 6. Invesco QQQ ETF, QQQ. The Invesco QQQ ETF, QQQ, tracks the NASDAQ 100 index, which is heavily weighted toward tech stocks like Apple, Microsoft, and Amazon. Because of its focus on high-growth technology companies, QQQ has consistently outperformed broader market indices like the S&P 500. While this fund is more volatile, it has provided an average annual return of over 15% in the last decade, making it a strong choice for long-term growth investors. 7. Vanguard Growth Index Fund, VUG. VUG focuses on large-cap growth stocks, which tend to outperform during economic booms. It holds companies like Apple, Alphabet, and Nvidia, which have shown tremendous long-term growth. With an expense ratio of 0.04%, it offers a cost-effective way to invest in the fastest-growing U.S. companies. Historically, VUG has outperformed the broader market during bullish periods. 8. SPDR S&P 500 ETF Trust, SPY. SPDR S&P 500 ETF Trust, SPY, is one of the oldest and most well-known ETFs, closely tracking the performance of the S&P 500. SPY is highly liquid, making it a favorite among traders and long-term investors alike. Its expense ratio of 0.09% is slightly higher than some competitors, but its track record of strong returns makes it a solid choice. 9. Vanguard Dividend Appreciation ETF, VIG. For those seeking stability and passive income, Vanguard's Dividend Appreciation ETF, VIG, is an excellent choice. This fund focuses on companies with a strong history of increasing dividends, such as Johnson & Johnson and Procter & Gamble. VIG provides steady returns and lower volatility compared to traditional stock market indices. 10. iShares Russell 1000 Growth ETF, IWF. The iShares Russell 1000 Growth ETF, IWF, tracks the Russell 1000 Growth Index, which includes large-cap companies with high growth potential. It offers exposure to leading tech giants and has consistently outperformed the broader market over the long term. With an expense ratio of 0.19%, it is slightly more expensive than other index funds but has delivered strong returns. Investing in index funds is one of the safest and most effective ways to build long-term wealth. While no investment is completely risk-free, these funds have consistently delivered strong returns, often outperforming actively managed funds. Whether you're looking for broad market exposure, high-growth stocks, or dividend income, there's an index fund that fits your investment strategy. The key to success is starting early, staying consistent, and minimizing fees, and these top-performing index funds can help you achieve financial success over time.